Hey everybody, happy Tuesday. It's your Taco Tuesday segment, so welcome in. Today we're going to talk about some on-chain stuff, a whole bunch of other news because there's so much going on today, and it was a good day. Things are rebounding, and we're going to talk about volume and my favorite volume indicator and how I use it and how it works. So it's not one of my top 10, but it's probably number 11 or 12. So we'll talk about that too. And I did promise a part 2 of the Ichi, and I will do that probably next week, but I'm refining some tools that will make it easy for you guys to understand. So without further ado, let's jump in. A big thank you to the mods in the chat and everybody else. Good to see Preston and far east, and we have Caligula, we have the Big Apple, we have K8, and everybody keeping us safe. Appreciate you all. All right, math, money, and freedom, and this is edutainment. So first of all, we're going to do a little bit of news because there's a lot of stuff going on. And you know, I'm a big Jack Dorsey, Bitcoin, Square fan. But today, talk about a Pureplay. And Square was completely beaten to hell. Hit 135, bounced clean off it. And I think it's a very, very good name for the next 12 months. But Jack has integrated the Square Cash App with Lightning. A lot of people, including a lot of professional athletes, use Square to buy their Bitcoin. So watch this space. And this is on top of Jack Moller's launching Strike in Argentina, which has been plagued by inflation for the longest time. Anyway, nothing but goodness there. In addition, Fidelity, you know, I did say one of my top 36 predictions was another sovereign state, at least one more, would hit in 2022, like El Salvador. But Fidelity came out today and they said this. They said, just in, Fidelity wouldn't be surprised to see more countries and a central bank adopting Bitcoin this year. Wow. So that would be pretty stunning. Multiple countries and a central bank. So super interesting to watch. In addition to that, speaking of Fidelity, this is a chart, just for those people who are a little bit rattled over the last couple of days. But it's all about supply and demand. And Jason Trummer from Fidelity put this together. Jurrien Trummer, not Jason, sorry. Put this together. And it's his core thesis is similar to mine. Supply and demand, similarities between gold in the 70s, etc. But here he talks about the different levels. He talks about the 30K level in 2021 provided a support based on the demand model, the S-curve you see there. Now, that same level looks to have moved up to 40K per his analysis, providing fundamental support once again that this is a number go up technology. And that 40K is, we have breached it, but it seems to be a very clear support this time around. And for all the people that were hoping for 20K Bitcoin, sorry to disappoint you. I don't think it's going to happen. And either does Mr. Trummer from Fidelity. Now, it doesn't mean it can't go lower, but it does surely look like 40K is the new 30K. And it's similar to my 3 steps. Remember my 30K, my 42K, and then the 47K. This would be step 2. Hopefully we'll establish a step 3 in the next couple of months as well. But remember, at any time, we could fall out of bed due to a black swan event, a la C19 in March 2020. So good news from Jurrien. Thank you for that. Now, we're going to talk a little bit about another on-chain indicator called the Dormancy flow. And this initially came about because of David Puell. He's the guy who has the Puell multiple. Now, what this is, basically here is a old chart to show you the buy zone and the bull-bear threshold of how this indicator works. But what's really interesting is it hit again. Now, the basis behind it is whenever the network value remains high relative to the yearly moving average of its realized dormancy in dollars, the bull market can be considered to be healthy since the price remains relative to the market's annualized spending behavior. However, when dormancy value overtakes market capitalization at the lowest levels, the green kill box at the bottom, then that can be considered full capitulation. And we know what capitulation means. When people are kind of throwing the towels like, oh my God, I can't take anymore. I'm dying here. They just sell. When that happens, it sounds like a terrible thing, but it's actually a good sign because it means the market is actually bottomed. Now, per this, Juju and William Clemente post this. I don't know which one posted first or who copied who or whatever. But here, this is the EADF, the Entity Adjusted Dormancy Flow. And here you can see it has only fallen into the buy zone 5 times in its 13-year history. And today was number 6. So it may be nothing, but it may be something very large. And this triggered a couple of thoughts as to why I want to talk about volume today, is for us to be able to see when buyers come in and when they go out. It's very important. So before we jump into that though, TechDev also said, per his indicator, or I don't know if it's his or not, but the cycle peak indicator is at a 37, so we're still way off the top. More good news. Nothing but good news. This is another one from TechDev as well, which I thought was handy. And it looks at the 2-week candles. I never look at 2-week candles, but this got my attention. And it's a great way of identifying also those types of steps. I mentioned the 28K, 29K step, the 40K step, the 52K step. Corresponding to mine, it would be a 30K, it would be a 42K, and a 47K. They'd be my 3. And then the 64, 67, 68K is kind of the roof that we need to penetrate and beat through to break through to an all-time high. But according to his analysis here, he shows you a couple of things. One, the 2-week time frame, and closing a 2-week candle outside of the range gives you admission into weeks of price action that follow next. It's kind of interesting to think about. Now, Bitcoin is testing the bottom of the current range right now. The 2-week candle to close in a little over 8 days. Expect the 2-week 21 exponential moving average as it did in June, July. But if it closes the 2-week candle below 40K, he could expect there could be a little bit of weakness following. So let's hope we can close this 2-week candle above the 40K number, or else it could be a little bit of weakness. And TechDev normally isn't a bearish guy, but you know, after me beating down for a certain amount of time, you can become a little bit bearish. Now, this is another one from him, zooming out as well. It shows you these macro accumulation and consolidation ranges. And again, we are close according to history, but history may not repeat, but sometimes it rhymes. But we could have an impulse range coming soon. Now, I don't want to get hopes up, but a lot of signs we saw today were very, very bullish. Number one, last week I talked about the Ichimoku cloud. Well, look at this. For last week's TA Tuesday, for the first time since 47K, we flashed green on the 2-hour Ichi candle. So that was an extremely bullish sign. I posted that earlier today somewhere else. And this means that Bitcoin, of course, is already very oversold in the RSI. And the 200-day moving average is 48K, and we're 5K beneath it. And it looks like a death cross will be a non-event, as often is the case 1/3 of the time. So that is the Bitcoin chart. Very good. Now, what did Ethereum do? Ethereum is very similar to Bitcoin. It also flashed green. Whoop, whoop. So again, it looks like everything is kind of tracking with Bitcoin during these capitulation times. Now, let's talk about why I'm talking about volume today. And this triggered my whole idea, as well as a couple of other factors. Mike Novogratz said, institutions are going through their process to put Bitcoin positions on right now. So it made me think, okay, so if they're going through the process and getting ready to pull the trigger, how can we see that? And this jumped to sharing the VFI indicator with you all today. Again, TradingView link below if you don't have it. But this deep dive is into this. It's a pretty simple indicator, but we'll see what the charts show and which ones are flashing a bullish signal using it now. So before we go, volume is representative of money flows. And as I always say, follow the money. Here, before we jump in, this is last week. We saw a lot of drainage out of Bitcoin, Ethereum, Binance, and Tron. Tron, interesting for that to pop up there. The rest were flat, which is funny. I thought there would have been a drainage out of some other names too, like Polkadot and Cardano and Solana, but they were all kind of flat, which is good. But that always typically happens during a down market. The money has to go somewhere. Now, in addition, what happened over the last week, obviously, this is a chart that shows that Kazakhstan, the outage, did hurt Bitcoin price, and so did the Fed. This is the chart here from Arcane Research showing those headwinds. So since the 5th of January, starting with Kazakhstan turning off 13% of global mining hash rate. That's how much Kazakhstan runs, because all the Chinese miners went to Kazakhstan, which is kind of, they can nearly jump in a bus and go there, and I think that's why they landed there. But A few hours later, after the Kazakhstan miners were turned off because of some problems locally, 9 hours later, I think, in fact, the Fed published their statements and they were hawkish. So that rattled the markets too. So it took Bitcoin from 47K all the way down to about 40K, and the rest is history. So let's see. Speaking of miners in Kazakhstan, by the way, the miners are accumulating massive amounts of Bitcoin. This is the highest accumulation level since May 2021. So that's also extremely bullish. Just want to slot that in there because we were talking about miners in Kazakhstan. And a little bit more about volume. Let's look at some high-level volume metrics from the block research. Here, since this is a volume story, it's important to look at the overall adjusted and on-chain volume and how it decreased. It decreased by 13% over the last month for both Bitcoin and Ethereum. And that's typical as well during the holidays, Christmas holidays, New Year's and stuff. Volume does go down. People aren't as active. People aren't trading as much. Let's look at some volume for the perpetual derivatives market. That was down 25% for Bitcoin and up 9% for Ethereum. So it looks like people are copying Raoul Pal and placing big perpetual bets on Ethereum as they go forward. Interesting. Also, if you look at the actual volume on exchanges for Ethereum, that's draining rapidly. So that Ethereum is going to pump sooner or later. People always ask, why didn't you sell your Ethereum yet? It's like, that's why I'm waiting for this thing to happen. So the Bitcoin futures were flat versus Ethereum. Also interesting. Perpetuals down for Bitcoin, up for Ethereum. The futures were just flat. It's another interesting one to look at. Now let's jump into our indicator real quick. Sorry about that big intro, but I felt since we're talking about volume, we need to talk about all the angles that are important. So, volume flow indicator, it basically is how much money is flowing in or out of an asset. And it measures the flow of money, again, in or out of an asset or a security or a crypto or whatever else. Now, it's very similar to the RSI, which I use a lot, but it incorporates volume when it does that. Now, the time frame that I use for the VFI, and you can find it in your trading view, is 1 hour. You can also find it on Thinkorswim if you use Ameritrade. It has it there too. Now, how to read it? Real simple. The way I read it, there's different interpretations of the way I use it, is bullish. If the VFI breaks through the zero line, this denotes a bullish trend. And when a VFI breaks below the zero line, this denotes a bearish trend. And I have to stress this here. The more it punches through the line up, the more bullish it is. If it just struggles through it, it's not very bullish. If it shoots through it, very bullish. If it punches down through it, very bearish. So the more vertical the slope, the more bullish or bearish it is. So let's look at a couple of examples, and hopefully we can plant some seeds with you all out here. And again, this is just one of more than 10 things that I look at, depending on exactly what I'm trying to identify. So let's look at the Bitcoin VFI. Here, you can see a couple of things in the charts. We have volume, and it's kind of like a little bit hard to see, maybe for some of you out there, but I'm going to try, well, I can't really blow it up. But at the very bottom, you have the VFI indicator. In the middle, you have the actual volume. This is the spot trading volume. Red denotes selling volume. Green denotes buying volume. That's kind of like the balance of power. When it's mostly red, it means the selling is happening. And this is how I identify big dumps by whales. And I can say, oh yeah, they dumped 8,000 or 9,000 or 11,000 Bitcoin all at once. But right after they dump it, they buy it back. So they just do it to liquidate the longs. And it's even hard to believe that longs are still getting liquidated at this stage of the game. They should know better after 4 years. Anyway, that's the first part. Second part is you can see, again, the volume at which it increased and the way it was bought back so fast. Now, the other thing that's interesting to note is at the bottom of the VFI indicator, it punched through the zero line. That middle line across the middle is the zero line, and that means Bitcoin is flipping bullish. So we have a couple of bullish indicators in Bitcoin now. We have RSI being oversold with the Ichimoku indicator flipping green, and now we have this. So that is bullish for Bitcoin. But let's look at some other examples. Let's look at Fantom. And here on Fantom, again, we see the break through the zero line, but this one smashed through it with a lot of vertical slope. And you can see the line at which the breakout happens. The VFI is slightly delayed from the price action, but again, it's a very, very solid indicator that needs to be ratified with consensus from other indicators that we are in a very bullish pattern. Now let's pull up another example. Near Protocol. This one, it really exploded. And again, you can see similarly, it shot through the zero line and blasted off. Boom, boom, boom. Also, watch the bars in the middle. You see all the green? That's all buying action. If you go back to, I can't remember when it was, back in December, you see a huge spike in green volume as well. A big chunk of buying. And the graph doesn't represent it because I just cut it off just to zone in on exactly what we need to look at. But that happened as well. And that corresponded also to breaking through the zero line at that date. So you can see here a perfect example of how it worked twice. And Near Protocol is just being accumulated like crazy. Next one. Now, it wouldn't be complete if I didn't talk about a bearish scenario. This is Shiba Inu. And as you know, 2022, as per my forecast, would be the year that the meme coins would really suffer. And all the pumpage in the world cannot save them. But here, you can see the VFI. It has never been close to the zero line for 3 months. Normally, it oscillates above and below, above and below. This one is just sucking wind like you wouldn't believe. So again, this is how you also indicate a very bearish pattern with a meme coin that just will struggle and will always be under zero for many months. So sorry for the SHIB family out there. There's probably none in this audience, but just in case there are, that's how you identify a very bearish pattern. Now let's look at some stocks. Does it work for stocks? Let's have a quick look. So here, Google, a lot of you have been on with me. I was like, when can I get some Google? Now I say 2,500, 2,400, that type of zone. But we had a big wick down today. Absolutely dropped out of the Bollinger Band. And guess what happened? Again, the big message here is once things get really cheap, covered in yesterday's video, every asset has a price. I'll zoom out. If the price of something is high and it's overvalued, it won't attract many buyers. But if it gets beaten to death and drops a huge amount and still has a compelling value, buyers will jump in fast. Now, for some reason, my alert did not go off on my Amazon because I had an alert to buy at this level and I missed it. And I'm kicking myself again. Too busy. I need to make more time to look after my own portfolio. But this is one I wanted to get back in on, and it was, oh, no, that's Amazon, I'll talk about in a minute, but that Amazon alert didn't go off. I already own Google. But here you see the big drop below out of the Bollinger Band and the big spike in the VFI and about to pierce through the zero line and the big amount of green jumping in too. So again, that is a compelling position. Now I was jumping ahead in my head to Amazon. And here, this is the Amazon action today. Again, similarly, fell out of the Bollinger Band, just like it did a month or so ago. And look at all the green on the volume in the middle bar. All the buyers jump in at this price like crazy. And the VFI piercing through zero. Boom. That's it. That's how you use volume. And my favorite volume indicator, the VFI. And that's how you tell if something's flipping bullish or bearish. And again, use it in combination with a whole bunch of other tools as you go forward. So I hope you like it. Again, covering little pieces that I use every single day and how I use them. But make sure you use the 1 hour time frame and compare it to other things. Also, that VFI in combination with RSI is a very powerful tool. So a big thank you as well, once again, to all the moderators out there. And I'll see you all tomorrow. Take care, everybody.